and time periods, etc. But anything technically, I think I can answer most of those. All right, this is just kind of a graphic of the alert service that we have. It's called Compass SMS Text Alert. The Spy Super System software used to be called Compass when it was first started. It's been changed since then and updated to be more effective. But I still call this the alert service Compass because that's what everybody knows it as. But this is what the alert service looks like. The alerts go out on your phone, SMS text alerts. They'll go to your phone. I'm on the alert service, so I know how long they take. They take somewhere between about 5 and 10 seconds to get to your phone once the alert goes out, depending upon who your carrier is. Okay, just want to go over this. I know I go over this every webinar. If you've heard me talk about this before in my webinars, you've probably heard me talk about this. But this basically is defining what moves the market. You know, today the market had very little movement, very little movement, very slow. It was very slow, very low volume day. So there's not much move in the market. But the market's made up of two elements. These are these small little marbles right here. This is retail traders such as myself, and I suspect everybody else here is a retail trader. And the big marble here, these are the institutions. The institutions are made up of 4 different categories. We'll talk about that. But the important thing to understand is when the retail traders are what's in the market, there isn't very much institutional involvement in the market. There's always institutional involvement, but there's not enough institutional involvement that are aligned in one direction or the other. Retail traders are who's doing most of the trades. You can't move, retail traders cannot move the market. They can't create a trend. They can't reverse a trend. All they can do is create chop and chaos. So we don't really want to be in any trades with just retail traders are in there. We want to be in when the institutions are in there, because this is what is going to move the market, and we can then follow them. We got to take our money from retail traders. Keep that in mind. We're not taking our money from institutions. We're taking them from the retail traders who don't have the same information we've got. They don't have the same software we've got. They don't have the same criteria we've got. They just don't have the expertise that we do because of the software that we use in our technical analysis to trade. And we take our money from them. But the institutions are what move the market, and this is what we need to focus on. The institutions are made up of 4 different elements. They're made up of investment banks, and everybody's probably knows this: Goldman Sachs, JP Morgan, Wells Fargo, Bank of America. These are all investment banks. They have billions of dollars to invest and to trade, and they do it all day long, right? Secondly, there are hedge funds, hundreds and hundreds of hedge funds, again, with huge amounts of money to invest and trade. So they're part of the institutional group. And then you have mutual funds, which is another part of the investment of the institutional group. That would include things such as Vanguard and T. Rowe Price, all the big mutual funds. Again, billions of dollars. And then you have things like police funds and state worker funds, pension funds, basically all the pension funds. Again, there's hundreds and hundreds of these pension funds that people put money into to create their retirement, et cetera. And these pension funds are managed by these as an institution. So the institutions include those 4 particular groups. All right, now, understand that especially investment banks and a lot of hedge funds, they trade manually just like we do. They click mouse, but most of those trades, about 85% of the trades that come from the institutions are coming from what's called algos. Algos are computer programs that have been written by these institutions to look for specific setups or specific information to basically initiate a trade. They look for news. They look for news when the FOMC, when the Fed comes out with their interest rate statement. They read that. They read this stuff electronically, and they can react to that in milliseconds. They just shoot the trades off immediately after seeing this stuff. And if you ever watch the market, by the way, when the jobs report comes out, or the FOMC on a Wednesday comes out with their statement at 2 o'clock, you watch the market and you see right at 2 o'clock in a millisecond, you'll have this huge volume spike in the market. It'll either be pushing the market up or pushing the market down. That's the algos reading that news and creating trades based on that. Right? That's just there's no way you can push a mouse as quick as they generate those trades. So the algos generate about 85% of the trades. And our job is to identify when all these algos are working in unison to push a particular stock or a particular index one way or the other, right? And but these algos are very important because they can actually write programs to look for particular setups that retail traders use. They used to use MACD crossovers, RSI, etc. They can find those things, right? They can find those particular setups, and they write algo programs to bust them, and that's how they can bust retail traders. And they're getting better and better all the time. So we don't really worry too much about that here with the trading room, because we're actually just identifying when the institutions are in the trades and when they're not. So we can see what they're doing. We're not trying to take advantage of a setup that they're going to be able to break. So we'll talk about that as we go. But this is what drives the market. So when the institutions are pushing the trade, we want to be in them, and when they're not, we don't. It's pretty simple. No trade. I'm not going to take any trades, generally speaking, that the institutions are not leading the charge in pushing the stock up or down. And again, the institutions can be trading all the time, but they can be trading against each other. What we're looking for is a situation where there's enough of the institutional trading going on from the investment banks and from the hedge funds, et cetera, and they're pushing a particular stock or an index in the same direction. That's what we're looking for. We're looking for a consolidation of where those institutions are pushing this. Okay. All right. So that's what we're going to talk about. I'm going to talk about something here that seems a little bit off topic, I guess. This is a blackjack table here. Ace of spades, jack of spades. That's a nice little blackjack. Couple $100 chips. So this is a blackjack table, and this is a blackjack winning hand. So what in the world has this got to do with trading? Well, when you first start to talk about becoming a trader, whether you're talking about trading options, trading stocks, being a day trader, what people are going to tell you if you talk to your relatives or your friends is they're going to say it's gambling. You can't win. It's fixed. You're gambling. You should not be trading that stuff. You can't win, right? So is trading stocks and options actually gambling, right? So let's talk about this, because the reason I threw this blackjack table up here is because there's a way to beat blackjack. If you're able to keep track of cards, keep track of not specific cards, but keep track of the composition of the remaining cards in the deck, right? It's called card counting. And this is how I made my living when I was much younger. I lived in Las Vegas, and I was a card counter, and I made my living doing that by keeping track of the composition of the deck. Now, the way that works is, just to give you a little bit of quick background on that, as the cards are dealt out of the deck, the little cards, deuce, 2, 3, 4, 5, 6, 7, as those are removed from the deck, if there's more of those coming out than normal, what happens is that shifts the advantage to the player, right? If you've got big cards coming out of the deck more than normal, 10, jack, queen, king, aces, that swings the advantage to the house even more than normal, right? A deck that is completely neutral, the house has an advantage of about 0.3%. But as you keep track of the cards, so what we did was we tracked the cards as the hands were dealt. We kept track if there was more little cards or more big cards coming out of the deck. If there was a lot more little cards coming out, we kept a plus or minus count. We kept a count as the little cards were removed, and there were more than the big cards. We'd end up with plus numbers, +1, +5, +10, and that gave us the indication of how much of an advantage we had. And based on that, we could then take bigger bets when the deck was in our favor, and very small bets, the minimum bet, when it was against us. That's how the card counting works, right? So what it did was it gave me a mathematical edge over the casinos by knowing the cards are in my favor. Very important. I mean, very critical. So trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has very little edge, hardly any edge at all. So in essence, you're gambling. Now, the important thing to understand about this is, with the software that we've got that identifies institutions in the trades and the technical analysis that we do on these, we have an advantage over all the other retail traders, a big advantage. But it's also important to understand that it requires both of these, card counting and trading, both require discipline and emotional control. Most retail traders, even if they know how to trade well and they have a good strategy, they have a hard time maintaining discipline and emotional control. They have to take a couple of losses. They do revenge trading. They just want to get into a trade. It's that fear of missing out. So greed kicks in and fear kicks in. The market is driven by fear and greed. Remember that. It's fear and greed that moves the market. And what we want to do is we don't want to get any fear or greed. We just want to trade very methodically with knowing when we have the advantage and take advantage of it. So again, that's why playing blackjack and trading is very similar. The SPY super system is, I call it my card counting system. This is what lets me know if I have an edge over the other traders by knowing when the institutions are in there. So it gives us an edge over other traders, allowing us the ability to become consistently profitable. And this is important. Consistently profitable is a key thing here. I mean, everybody can have wins and losses. Trying to be consistently profitable is much more difficult. And the SPY super system, the software that I'm going to show you, in conjunction with identifying the best high probability trade setups, can lead to consistent profits. What that means is, if we've got stocks that maybe 3 or 4 different stocks that the institutions are in, okay, those are going to be our high probability trades. Then we're going to try to find the very best out of those by looking at other technical analysis, like how much room do we have before we run into a resistance level? What's the risk reward on the trade? Those kind of things. But this is what generates the trades that we make. And it's important to understand that the SPY super system is what drives our results. When I get into the results to show you what kind of results we have, remember, it's the SPY super system that's allowing us to do that. Okay, so in the room and on the alert service, you've got a couple of rules to trade by. Trade the best and skip the rest. I mean, it seems kind of obvious, but knowing how to find the best is not that easy, and skipping the rest is probably the most important thing. You know, it's nice to have winners, but it's to understand that if you can avoid trades that look good, but would generally have turned into losers more often than not, skipping the rest is really important. And that's why I try to preach patience in the room. Be patient, wait for the best setups. Today, there were basically, because the market was so slow, there was basically zero. There was one high probability trade set up on silver that I traded, but that's about it. There just really wasn't that much in there today because the volume was dead, which is normal for a day after a holiday. But skipping the rest is this is something people usually overlook. If a system can tell you, maybe you say, I didn't take any trades today, I want to take some trades. You get disgusted because they didn't take a trade. Not understanding that by skipping those trades, you probably were putting a lot of money in your pocket by avoiding losses, right? So avoiding losses is very important. And again, I point this out in the room every day. Our objective is not to make trades. Our objective is to make money. That's why everybody trades. We don't trade for fun, we trade to make money. Our objective is not to make trades, our objective is to make money. This is geared to let traders understand that being patient and just finding a few good trades is all you need. You don't need to be in trades all the time. And this over trading is a huge problem for a lot of retail traders. They always feel as though if they're sitting in front of the computer, they've got to be in a trade. You do not have to be in a trade. If there's no good trades, you're better off just sitting there and watching. All right, so that's our objective, not to make trades, it's to make money. Maintaining discipline, and this is, once you learn the SPY super system software, and once you learn how we pick out what the criteria is for high probability trades, and you internalize that, you learn that, that's maintaining discipline means stick to that. And don't be reading some tweet on X that's telling you there's some special trade that's coming along. Some, you know, Netflix is going to go up 20%, or your uncle's brother-in-law's sister calls you and tells you about a hot tip that they heard. Maintain discipline, follow the methodology, and that's how we trade. We don't wander looking for the holy grail, looking for the highest probability trade sets is what we want. We don't really care what somebody else thinks. We just care what the market is showing us, right? So we learn and follow the process. I'll go over what the process is, and remain patient. So this is the key, to remain patient till these trades show up, and then you take them. We don't take a lot of trades. We only take the very highest probability trades. We probably only have, you know, somewhere maybe between 20 to 30 trades a month or so overall. Sometimes more, but generally that's typically what we take. All right, so as a profitable trader, we need an edge over the other retail traders. We have 4 edges here. We have the SPY Super System software. This is what tells us if the institutions are in a trade or not. If the institutions are not in a trade, we're not going to take it. When we get into a trade, we're only going to do that when the institutions are in there. Now they'll come and go. They'll get into the trade and out of the trade, but we want to see that there is some institutional and significant institutional involvement in the trade. Trading relative strength and relative weakness. This is really overlooked a lot by retail traders. This doesn't mean RSI. I'm sure you've probably heard of RSI. Relative strength and relative weakness is how is the stock that you want to trade, how is it performing right now on, for example, a 5-minute chart? How is it performing compared to the SPY? So if the SPY is just moving sideways or down, like it was today, it was basically drifting down, and you've got a stock that's stacking green candles and moving up, that's relative strength. And this is a big edge to take a stock that has relative strength to the long side or relative weakness to the short side. Because if the market turns against you, goes against the direction you're going, your stock is going to outperform what happens because it had relative strength. It won't fall as fast. And that's really important. So relative strength and relative weakness are highly overlooked criteria that most retail traders should be using, and very, very few do. All right, trade with the market trend. Yes, everybody's heard about this. If there's a trend, then you trade with it. A lot of times there is no trend. Today, the market gapped up, and then it drifted down most of the day. So it was a fairly bearish type day with very little volume. The problem with a day with very little volume is you don't have really much institutional moving the market. It's just retail traders pushing it. And so things don't keep going. If they start to go down, they'll bounce and go down and bounce and go down. It's hard to stay in a trade very long. But we do trade with the market trend if there is one, and buy near support and sell near resistance. This is really important. And support is, you're going to have a technical analysis to show you where your support is, but 50-day moving average, 100-day moving average on the daily chart. On the 5-minute chart, it's the VWAP, volume weighted average price, or the 15 EMA, or the 8 exponential moving average. Those are support resistance levels. You want to get in near a support or resistance level when you take a trade, because if it goes against you, your losses are going to be minimized. It's not going to drop as fast. If it drops below your support level, like if you get in just as the stock goes up above the VWAP, and it turns against you, and now it closes below the VWAP in the next candle, you're out, and your loss has been very small. If you chase the stock way up and your support level is 6 or 8% down below where you got in, you've got a long way to go before that comes to support, and you've got to take a loss, and you're probably not going to be able to stay in the trade. Right? So those are the 4 edges that we have, and this is important. The compass system, which is now called the SPY Super System, as I just said, what it does is identifies when institutions are in the trade and when they're not. Right? And it does this by, we look at multiple time frames across multiple criteria. And then we put that information on the SPY Super System in a color code so that you can tell when the institutions are bullish or when they're bearish or when they're neutral. And you can see that with the color codes. Now the color codes is really helpful because for traders who are new, it's going to make even new traders be able to identify when institutions are in the trade and when they're not, without having to do a lot of technical analysis. So it really kind of speeds up the learning curve to become a consistently profitable trader. There is a learning curve to become profitable trading. Let's not sugarcoat this. Trading is not easy, right? You get a lot of emails and you've seen webinars about how simple it is to trade. We I think have got the best system to define when you should get into a trade and when you should get out of a trade, and which ones are likely to work. That's how we're able to maintain an 85 to 90% win rate. But trading is not easy. Trading is very difficult, and with the right criteria, you can make it much, much more simple. And that's why most retail traders don't make it in this business. I mean, most retail traders will either give up or they'll blow up their account. Okay. Getting an edge over the retail traders. We only take trades that are being driven by institutions, as I've already said. We trade stocks that have relative strength or relative weakness to the SPY. Please don't overlook this one. This is really important. And we trade in the direction of the overall market trend, if there is one. Right? How does it give us an edge? Well, our trades will be supported by institutional buying and selling. This is a huge edge. We're in a trade, we go long in a trade with some calls, and we've got the institutions in there buying it as well. The likelihood that that thing is going to go in our favor is extremely high, right? The stocks will be outperforming the SPY, again, giving us more of an edge, and they'll be moving in the direction of the overall market if there is a direction. This is, if you can do these things, these three things here, you're going to be head and shoulders above about 95% of the retail traders in the world, and there's millions of them out there risking their money all the time. And the quality of a retail trader, as far as how they trade, is very poor, very poor, which is why we can be consistently profitable. I mean, I don't want to be too harsh about this, but you know, it's a battle between the retail traders and us as a retail trader. If you're better than they are, you're going to take money from them. It's really simple as that. Okay. Okay, now the SPY Super System software, I just want to emphasize something before I go into the setups on these things. The SPY Super System software, it's the critical element in finding and trading the highest probability trades. This is really important. The SPY Super System software is the engine that drives our exceptional results. When you see the results that we've had, keep in mind that it's the software that's doing this. Now, you don't have to have the software. If you're in my room, you'll see the software, and you can ask questions about it. But if anybody wants to trade on their own and not have to depend on the room or anything else, having this software is really important. I mean, this is probably, from a software standpoint, this is an excellent piece of software that I would highly recommend that anybody who is serious about trading gets. Because I bought it when I found it about 4.5 years ago. It increased my win rate by about 10%, 10 or 11%, from 80 to about 88%. That's a big difference. And believe me, I had been trading about 15 years at the time with very good results. So this is what drives our exceptional results. Again, the ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing high probability trade setups. And that's the function of the SPY Super System software, and it's the critical component of our success here. Okay? And again, it makes it much easier for new traders to learn how to trade. We have very specific criteria for our setups, which I'll go into, but this is what helps us make sure that we know the institutions are in that trade. I do have Rightline has a YouTube channel. I'm on there every day from 11:30 to 12:30. You'll be in the room if you're on the YouTube channel. You can see the room in action. You can see the SPY Super System. You can see our call-outs on trades. You can see us discussions and our education, looking at the trade setups, etc. Answer any kind of questions you might have relative to that. 11:30 to 12:30 every day of the week. It says 11:30. We've changed to 11:30 to 12:30. And I want to just, this is a little bit, again, a little bit off topic, but I want to cover this. I did a video on this, the most common mistakes retail traders make. And how did I know this? Well, because in my 17 years of trading, I've made all these mistakes. And I tried to sequence them. It just depends on your personality, but the most important thing is not considering current market conditions. This is a situation where somebody looks at a 5-minute chart and they love it, and it looks great, but they don't take a look at what the market's doing overall. They're just looking at that one individual stock, not looking at the overall market. And I always look at the overall market. On a 5-minute chart, if you're trading an intraday trade, if the market's trending up and you've got a stock that's moving sideways, moving down, yeah, it's bearish, but what does it look like if you go back over several candles, 10, 20, 30 candles on a 5-minute? Is this thing in a trend, or is it just chopping all over the place? So the easiest way to trade these trades on a 5-minute chart is if the market's trending and your stock's trending, you've got an A+ type setup. If the market's choppy and your stock's trending up, it's a good setup, but you don't have a market tailwind, and it's going to be a little bit more difficult to make a lot of money on it, so you have to cut the trade short a little bit. So considering the market conditions is very important. Over trading, talked about this already. People want to be in a trade all the time. I'm a trader. I got to have a trade on. No, you don't. No trade is a valid trade. Not having a trade is a valid trade. Trading your P&L instead of technicals. I talk about this a lot. Traders, they're always looking at their P&Ls when they're in a trade. And to give you an example, if you're in a trade and you're in it for 20 minutes and you're up $300, and then it goes against you. Now the trade setup was very good. It was a good technical setup, bullish, right? So you're up $300. Then it pulls back and now you're up 100 and you're getting a little bit nervous. And then it moves down, and the next time you look at it, now you're down $100, right? So you went from $300 up to $100 down. You're staring at your P&L. Went from green to red. Now the stock reverses. It reverses back up again. Now you're up 100. Then it climbs up. Now you're up 150. Right? Now it starts to reverse again. Now it goes down. Instead of 150, it's up 100. And then it's up 75. And you're staring at your P&L. Most traders, when that happens, they're now fear setting in. I don't want to give up this money I just made. So they dump the trade when it's up $75, and then it reverses and heads right back up again because it was a good setup. And they look back on it an hour later, and they probably gave up $300, $400, $500 in profits because it was an excellent trading setup that they got out of because they were watching their P&L. I recommend not watching your P&L during the day at all, just using the technical setups that we're taking for a trade and trade off of those. Right? I don't look at my P&L all during the day, and I don't think it's a good idea because knowing wins and losses create emotion in your trading. We're trying to eliminate emotion as much as possible. So fear and greed is instilled to you by watching your P&L. So I recommend against that. Trading what you think instead of what the price says. This is a good one because people are always watching Wall Street bots or their bets, or they're on X, or they're on some social media site, they're on Reddit, and they're seeing all these good trades that people are talking about, and they're getting influenced by what they're seeing, or what they're hearing from somebody, or what they're reading. They're listening to CNBC, or they're reading something in the Wall Street Journal, and that this is impacting how they trade. Trading what you think instead of what the price is. We simply trade whatever the market is telling us it's going to do. The market is telling us that it's going to keep going up. It's bullish, and we stay bullish. Back in the spring, there was a huge move in the market, down and then up off of the tariffs, right? And after that, there was a huge amount of bearish sentiment across the market that we was probably going to go into recession. Things should be going down. So a lot of traders and a lot of gurus on the web were taking short positions. They were buying puts in the SPY or the Qs. They were putting themselves in short positions, expecting that the market was going to go down, right? They were trading what they thought was going to happen. What did the market do? From April through August, it went up every single month. We stayed long because the market was telling me that it was bullish, not bearish. There was no reason to go short yet, right? Sometime there will be, but there wasn't. But they were stuck in these trades. That's a double-edged sword. You lose money because the shorts don't work, and you're losing money because you're not taking any long trades because you're afraid of the market going against you, right? You're trading out of fear because of what you think, right? Over ledger average, this is pretty obvious. Too much risk. When you put too much money into a trade, you're trading nervous. You're trading out of fear. You don't trade well when you get too much risk on. Not using the daily chart for swing trades. When you're going to take a swing trade, if you're looking at a 5-minute chart, you've got to look at the daily chart first. Daily chart has to be bullish if you're going to go long. Otherwise, you can't stay in the trade. If it goes against you, you have to get out. You don't have any daily chart to give you any support. Lack of patience, another important one. Forcing trades. This is part of having lack of patience. Attempting to pick tops and bottoms. Thinking when a stock has gone up as much as it's going to go up, or gone down as much as it's going to go down. So you're going to go, now I'm going to get in. The stock's gone up too much, I'm going to short the stock. Without any kind of understanding of whether there's actually any kind of top that's been confirmed and then reversed back down again. So picking tops and bottoms, a horrible way to trade. Not waiting for confirmation to enter a trade. This would be a case like if a stock breaks through support or breaks through resistance to the upside and then comes back, you want it to come back and touch that support and then bounce again. You want a confirmation that trend is going to continue, right? And FOMO, fear of missing out. Now I want to talk about this just for a minute, the trading what you think instead of what the price says. Because everybody is you're trying to learn things and you read things and your mind's getting influenced by these things that you read, which is what happened with why so many trades were bearish in the springtime, and they got clobbered because of that. And this is I point this out because this is a nice quote from Stephen Hawking, and this applies to trading what you think and not what you see. The greatest enemy of knowledge is not ignorance; it's the illusion of knowledge. When you're trading, what you think the market should be doing or is going to do, in other words, you're trying to predict based on something you read. The charts aren't telling you this, but what you're reading is telling you this. You are trading with the illusion of knowledge, right? And that's worse than not knowing anything, because you're trading and you're going to stick with it because in your mind, you're sure you're going to be right. And now you stay with these trades even longer than you should. Just remember this. The greatest enemy of knowledge is not ignorance, it's the illusion of knowledge. And reading something about a stock that is not confirmed by the actual stock chart, that's the illusion of knowledge. Okay, on the SPY super system, again, we've got 4 colors here that we're going to look at. We've got green. Anything green is strong bullish. Blue is a bullish trend. It's moving from bearish to bullish. Red is bearish strong, and yellow is a bearish trend. That's the only 4 colors we can get, but anything that's green or blue is bullish. Anything that's red or yellow is bearish. Okay, so this is the original SPY super system setup, which I'm going to show you. We made a slight modification to this, but this is the original SPY super system setup on a 5-minute chart, right? And there's market internals here. This tells us what the market is doing, the whole market, not the stock. This applies to the overall market of all the New York Stock Exchange market to tell you whether it's moving up or moving down, whether it's bullish or bearish. So you can kind of tell what the market internals are doing. Now, what we've got here is these are the indicators that are going to tell us whether the institutions are in the trade or not. We get 4 of them here. This is the actual oscillator. This is the Laguerre modified oscillator. This is has the divergence stripped out of it. This is just pure momentum. This is on a 5-minute chart. This is pure momentum. It's the Laguerre indicator. This is the current time frame momentum for that Laguerre indicator. All right, and there's other things go into this, but the simplest way to explain this is the current time frame momentum on a 5-minute chart. This is what the current time frame momentum is for that stock. Right here, we happen to be looking at the SPY. You go see blue is bullish, green is bullish. You can see it's going through a bullish trend here. See what the stock price is doing. Then it switches to yellow. Now we get it's coming down. Now we're getting a little bit of move to the downside, and then it goes red. You want to be out of the long once it switches like that. Okay, so that's current time frame. Then you have multi-time frame momentum. This is important for swing trades. When you're on a daily chart, this indicator and this indicator need to be both bullish or both bearish. Don't both have to be green, but you'd have to have green or blue and green or blue on both of these. If they're not aligned on a daily chart, then you can't take the trade. That tells you the institutions are not in there. And again, there's other things that it's looking at here. It's looking across money flow, and it's looking across trend. This is a long-term trend that also gives you more confirmation. And this is be more for a swing type trade than an intraday trade, right? And up here on the 5-minute chart, this is what we trade off of for our quick trades, the 5-minute to 5-minute trades during the day. We have the main thing here is the VWAP, the volume weighted average price, right here. This pink line, that is something that all the institutions use. They all use this VWAP. This is a volume weighted average price, is where they get in and get out of trades. It's one of our support resistance levels. The other one is the 15 EMA right here. This is another one we would use to get in and out of trades. Okay, down here we have a pivot point, all right, which I'm going to show you on a different chart here, but that's a pivot point. This is a support or resistance level. We don't trade off of that, but if you're in a trade short and it's coming down toward the pivot point, or you're in a trade long and it's coming up toward the pivot point, you have to be aware of that so that you can get out of the trade at that point because you're getting close to resistance. Right, so that's the overall chart. Now I'm going to show you some other things here. Again, here's the market internals I just showed you here, but this is what this looks like at the top of the chart. This is talking about total amount of volume across all the stocks like the New York Stock Exchange, long minus the ones that are set short. So total volume going up minus total volume going down, it gives you your trend. All right, and you also, if you buy the software, you get this template as well. This is just for folks who want an intraday trade. You're just interested in 5-minute charts, trading quick trades. All you need is the current time frame momentum and the other indicators, which is what you'll have right here. Okay. All right. So we've updated the chart layout now recently, and I'm just going to starting soon. I'm just going to use this one, but I kind of want you to show you what the transition was. This was been optimized for clarity and precision. I added the 8 exponential moving average, which I find extremely important, and it improves signal confirmation and trade timing for both entries and exits. All right, so here it is. This is the layout you're gonna get now. This is the new one. Here's the 8 right here. The 8 exponential moving average is the white line. The 15 is the green line, and the VWAP is right here. Those are our 3 support resistance levels. We want to be entering trades long if they go above this, and short if they go below this, as long as the current time frame momentum is aligned with it. Right, that's how we trade that. We've got pop signals. These are pop out of the box signals. These arrows indicate a compression break, breaking out of compression to the upside with the pink and to the downside with the blue. Okay, so that and again, here's the indicators we just talked about. These are exactly the same, but I did add the 8. And it's one thing that's very interesting to understand is when a stock breaks through the 8 exponential moving average, a lot of times it'll get to the 15 and bounce off of that. So if you're trading with the 8 and you're breaking through a breakout through it, you would wait until it broke below the 15 and closed below the 15 before you would get out of the trade. Okay? In general, I mean, a lot of times if you're in a trade, I have to say, when you're in a trade and you get a move like this and then you start flattening out, you probably want to take profits. Okay. I'm going to go over a few trades that we've taken so I can show you why we took them and what they look like. Right? This is NVIDIA. This is on a 5-minute chart right here. Okay, so here's the institutions down here on the 5 minutes, because we're only interested in this because we're trading a 5-minute chart. Right, so you can see they were selling here, see how it's red, and see how it goes to blue right here? Institutions buying it, see the little gears moving up. Institutions are coming in. This is telling us the institutions are coming into this trade. And this is where we take the trade. As it breaks above the VWAP and the 8 and 15 right there, this is the candlestick you would get in on. Okay, right there. And you would take this long and you ride it up. And as long as it stays above the 8, you're going to stay in the trade, stay in the trade, stay in the trade. It starts to flatten out. Here, you're going to get out of the trade. You're taking profits right here. You would likely do it anyway, but you notice it went back to yellow again. You're out of the trade. But that's your trade right there. That's about 7 candles. That's a pretty nice move in the NVIDIA. You know, if you're in an NVIDIA call, that's probably going to produce at least for $200-300 per contract profits in that. But all we're doing is following what the institutions are doing. Remember, we follow the institutions, and this is telling us what they're doing. Okay, this was a SPY trade right here. Again, you can see that you can see the breakdown. This is where I took the trade. Right, the 8's right here, and here's the VWAP right here, and here's the 15. By the way, when the 8 is below the 15, the trend is bearish. When the 8 is above the 15, the trend is bullish. Right, so when the 8 breaks below the 15, see how it broke below the 15? Was actually below the 15 right here, and then it breaks the VWAP right here. This is where you take the trade. Notice, institutions buying, right? Not much going on price-wise, but they were buying. And then they go to selling right there in this candle, and the price action shows you that it's breaking below the VWAP and the 8 exponential moving average right there. That's where you take this trade. Right there, you get into the SPY trade and you write it down, and your 8 becomes your stop. You just trade this as long as it stays above the 8. Now, for me, if I get something like this, I'm probably going to take it off because I've got a big enough profit here. I'm going to take it off right here on this candlestick. But notice the institutions were still selling the heck out of this thing, and even the multi-time was red as well. This, by the way, is showing the 5-minute. This is showing the 5, the 15, and the 45, and he telling me that the institutions are also weak on all of those levels. They're selling on all those levels. Okay, this is another SPY trade here. This was a long. Let's look at it. Right, so here's the, this was before I had the 8, but here's the VWAP, and here's the 15 right here. Notice we go selling yellow to buying blue right there. It goes above the VWAP. With the pop out of the box, it will leave it. It's on breaking compression. This is where you take the trade right there, and you ride this thing up. This is the same trade we just looked at a minute ago, but it's looking at a little different perspective here. And then it comes up, and this is where you get out, right? Even though it stayed green, I would have taken profits here. You don't have to, because it's still above your support level. But I took them off at that point. Tesla trade here. This was a good early trade. This was a trade for the getting in the morning. Here's the first candle right here, breaks above the VWAP. You got institutions went from selling yesterday to buying today. You take the trade, it's right on the VWAP. That becomes your stop. You just ride this thing on the VWAP, it moves up. It starts to put a red candle in here. You see how it went back to yellow? That's your trade. That's your trade duration right there. Right, that's a pretty nice little move. This was an NVIDIA trade. This was a trade, this was a swing trade that we took. This is a daily chart. See, this is different. So with a daily chart, we want to make sure that the current time frame momentum right here, which is daily, and the multi-time frame momentum, which is 1 day, 3 days, 9 days, we want to make sure both of those are lined up as bullish. The momentum is bullish across both of those, and then the trend was bullish. So what we do is we don't chase this, and this has the VWAP on here, but the new daily chart, this has been removed. But what we were interested in here is the 15. You see how the stock pulls down to the 15, and then I bought it right here. See how it bounced off the 15? This is called a PBO, a pullback opportunity. We get a strong stock that moves up, gets a little extended, comes back, comes down, bounces off a support level, and everything is green. This is where I took it. This is where I get out, right? 32% profit in 3 days right there on that trade. This is an SMR trade. This is another swing trade we took, right? This was earnings right here. Notice the institutions are selling, and then they go to buying on the 5-minute, on the daily, and the multi-day was also already green already, so that's where we take it. We take it right there, and we get in on the 13th right here. We get out of the 15th right here, 56% profit. If you put 2,000 into the trade, it'll be $1,170 profit. This is what I use for a baseline, just for my calculations. Obviously, this isn't what everybody uses, but I got to have some sort of a baseline to show profits and losses each month. So this is what I use as 2,000 invested in each trade. Okay, so that was SMR. Now this was Wendy's. This was another nice short. See how it went from buying to selling, buying and then to selling, but it broke down right here. It was selling and we were compressing, and it broke down below the 15. Take it right here. This was just an intraday trade, even though we're using a daily chart. It could have been a swing trade. All right. All right, so those are just a couple of the trades I want to show you, just to get you familiar with the setups and the different indicators. This is somebody who maybe suffering from FOMO, jumped into a trade when it was moving up too quickly, didn't get in close to a support or resistance level, has no idea if institutions were in the trade or not, and the trade just reversed on them. Now this is emotion. This is what you don't want to be trading with. This is the folks that trade. They try to have some idea where to get in. They don't really know. They like the stock. They don't care about where the support resistance level is, and then it reverses on them. Basically, he probably has a bottle of antacids next to him, because you don't want to trade like this. This is a burnout type situation. You just can't maintain trading when you're trading emotionally like this. And this is more like what you feel like if you've got a methodology and a system that you can follow. You know when the institutions are in the trade and when they're not. You've got strategies that you know work 85 to 90% of the time. You're going to feel a lot more confident about your trading, which is going to make your trading better. Because if you're not confident about the trades that you take, you're not going to stay in them the way you should. You're not going to trade them the way you should. You'll be trading with fear. You'll be trading with nervousness and scared money. Okay, now I want to highlight this. Process precedes results. What does that mean? Okay, the process that we're going to talk about is the setups that we already talked about, the criteria. The process is learning the criteria, which is not that complicated, and sticking to that criteria. Learning the high probability criteria and the strategies has got to come before focusing on your results. If you go into trading thinking that by watching whether you're making or losing money is going to determine whether you're going to be able to do this successfully, you're mistaken. Focusing on your P&L that we just talked about is not a good way to trade. The P&L is not going to tell you whether you have a good trade or a bad trade. You can pick a bad trade that'll work, You can pick a good trade that doesn't work. All you're going to do is if you take a bad trade that works, all you're going to be doing is basically confirming that's a good trade, and you're going to do it over and over again until you end up losing a lot of money, right? So don't focus on your P&L, learn the strategies and focus on them, right? So that's the process before profits. All right, so this is the high probability trade setup funnel. This is what we're looking at when we look for a trade. This is what I look at. First thing I do, if I'm going to have any idea that this might be a swing trade or I'm going to hold it overnight, first thing I have to do is look at the daily chart. Okay, the daily chart has got to be bullish if I'm going long. It's got to be bearish if I'm going short. On a 5-minute, if I'm just taking it for a quick intraday trade, I don't need to worry about the daily. I just use the 5-minute chart. But for anything that may become a swing, and when I say a swing, that could be getting in at 10 o'clock in the morning and getting out at 3 o'clock in the afternoon. That's a short-term swing as far as I'm concerned, which means if you're trading that kind of a trade, you've got to have a bullish daily chart for long and a bearish daily chart for short. Right? Then you look at your 5-minute chart to align your entry so that you're trying to get in around the VWAP or one of the 8 or 15 EMAs so that you're getting in at a good support level. Right? Then you got to trade with the trend, both the stock and the market. Right? So if you get a trending stock that's bullish and the market's bullish, you got an A+ trade here. You want both of those. You're trading with the trend for both the stock and the market. That doesn't happen all the time, but that gives you the best setup. Then the SPY super system comes into play here. The SPY super system has got to align. You've got to have, if you're going swing trade, you've got to have the multi-time frame and the current time frame momentum. Both need to be bullish. And if you're going swing trade short, they both have to be bearish, right? And if you're going to take an intraday trade, quick intraday trade for a long, for example, you've got to have a 5-minute momentum, a 5-minute current time frame momentum. It's got to be bullish for a long and bearish for a short. Please don't trade against what the SPY super system is telling you the setup is, right? Because if you're jumping into a trade without institutional backing it, it's going to be a problem. And then you trade with look for relative strength and relative weakness. You might find 4 or 5 stocks that meet this criteria. Pick the one that's got the most relative strength or the most relative weakness for a short, right? Relative weakness for a long, and then an enter near support and sell near resistance. That's it. That's the whole process right there, right? This is what will pick off trades and it'll give you 85 to 90% win rate, generally speaking. And that's what I get. You're not ever going to have that because when you take a trade, how you trade that is more dependent on your trading mentality, your emotions. So people are going to vary as far as what the results are. But this is what the status of the strategy that I use that generates those process. Those are the results. Okay, so in the room and on the alert service, these are the strategies that we use generally speaking. Straight calls and puts. All right, this is pretty obvious. Buying calls, buying puts. Calls for long, puts for short. I do straddles and strangles. This is a non-directional trade where you're just looking for stock to make a big move. You don't care which direction it's going to go. You just want it to make a big move. It straddles and strangles, non-directional. I do debit spreads using weekly options expiration. And this is a methodology you use. It can cut down on the cost of your trade because you're doing a debit spread. If you're buying a call debit spread, you're buying a call and selling a call at a higher strike price to reduce your costs. And I use weekly options expiration because they have the best ROI for debit spreads. I do time spreads over earnings, which will be coming up in January. We'll be getting a bunch of earnings. We do time spreads. This is a non-directional trade. I don't ever try to trade earnings in directionally. It's impossible over long term to do that. But this harvests or captures the volatility crush that occurs when the institutions, when the market makers put their prices on the puts and calls. Because when the earnings are coming out, the market makers don't know which way the stock's going to go, and they don't know how far it's going to move. So what we do is we have a certain specific set of criteria that we find for these time spreads, and we sell calls for this week and buy calls for next week, and this allows us to capture the volatility crush on the specific criteria that I've identified. And I have videos on all of these, but these work very, very well. And typically these are overnight trades. You get in just before the close one day and you take them off the next morning after earnings come out, and you harvest the volatility crush. Weekly ATM strategy. This is a neutral to bullish strategy where we sell puts against the stock. Weekly, we sell those puts every week, so it has to have weekly options. And at the same time, we have a longer dated long put out in time, like 6-8 weeks out in time. In case the stock reverses against us, then we can just let that long put ride down and we can make profits to the downside as well. It's called a weekly ATM strategy. At the money is where we sell these. That's why it's called weekly ATM. But I kind of call it an automatic teller machine because it produces really great results. But you've got to have the right setup. You've got to have the right stock, right? And then we do credit spreads to capture premium. We just did a credit spread on Tesla 2 days ago, 2 or 3 days ago. We put a credit spread on Tesla, a call credit spread. We thought Tesla had topped out. My opinion was it had put in a double top. It wasn't going to go any higher right away. So we sold a call credit spread. We collected $105 a contract. Today we bought it back for $50, so we made $55 a contract in 2 days. We could have waited till next week and harvest a little bit more, but I wanted to take the risk off before the weekend and another holiday week coming up. And that was a pretty good, that was over 50% of the max profit we could get. Right? In fact, I just sent out an alert on that and just sent the alert today that it's closed. And then we have this method called the SPY Super System methodology. This is for very high probability trades for this, to catch the SPY, the Qs, or any stocks. And I have a video on this. This is very specific, and I can't post them, and I can't alert on them, but I do have a video on them, and these things work very, very well. They're for very quick trades intraday, and you're only in one trade at a time, and you take profits on it and get out, and you can trade at multiples of these, but you got to have the correct setup, right? Okay. The alert service we'll talk briefly about. It's designed for day trades and short-term swing trades. So this is not an investment service. It's designed for traders who can't watch the market all day and don't want to. You're going to get real-time alert on the highest probability trade setups that come to your phone. And those alerts obviously are going to be on high probability trades, which means they're going to have institutional involvement. And likely the market internals are also going to be bullish or bearish, depending on which direction we're going in. And then we do additional technical analysis to find the very best ones. And it's been tough this month to do any kind of swing trades because I can do a lot of intraday trades and take profits in them, but I can't alert on those. I have to alert on ones that are a little bit longer. So right now we had that Tesla trade and we're long Amazon right now for a swing trade. All right, now this is my equity curve. I'm not going to talk a lot about this. This is if you put 2,000 into each trade in the room from January to October 15th, this is the profit you'd be up right now. If you did every trade, it was 2,000 per trade. Okay. All right. Now we'll talk here about Heiken-Ashi. Is there any questions right now about what we covered as far as the SPY Super System and the indicators, etc.? Again, it runs on Thinkorswim. You do not have to trade on Thinkorswim. You also can get a ninja version of it, which I don't use, but I use Thinkorswim. But I trade on Tradier. You can trade on Thinkorswim if you want. You can trade on Tastyworks. You can trade on Fidelity. You can trade with any platform that you want. Interactive brokers. Okay. Let's see here. All right. No more questions. There we go. We keep moving here. Okay, we're going to talk about Heiken-Ashi candles. This is a way to basically what I'm going to talk about is trying to find a reversal in direction. If you want to be long a stock and it's bullish in the morning and then it pulls back, you're looking for a reversal back into the original trend. That's the main reason I use Heiken-Ashi candles. I'm looking at confirmation that original direction has been confirmed. We're going back into it. Okay, so this is what Heiken-Ashi candles look like. This says British pound, Japanese yen. Doesn't matter. It's these are candlesticks. Could be gold, could be Tesla, could be Microsoft, could be copper, it could be anything. But what you've got here is Heiken-Ashi candles when they have flat tops like this, say no upper shadows, but flat top candles, those are bearish Heiken-Ashi candles, right? See how they're bearish, flat top, flat top, flat top, bearish Heiken-Ashi candles. This is a bearish trend, a bearish Heiken-Ashi trend on this particular instrument. Now notice that the candlestick starts in the middle of the previous candlestick. Always will start in the middle of the previous candlestick, just like that, because of the way they're calculated. There's two different, they use two different candles. to do the math on these. Now, that's bullish. These are bearish. This is bearish. I'm sorry. These are bearish candlesticks, bearish Heiken-Ashi candles. This is bullish Heiken-Ashi candles. See the flat bottom, flat bottom, flat bottom, flat bottom. That's a bullish Heiken-Ashi trend. What we're looking for is to try to find a reversal. Let's say we wanted to be long this particular instrument, and we're waiting for it to confirm that it's going to bounce back up into the original trend. Right. So it's coming down, and you got these flat top candles. Bearish, 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 bearish. Now you start getting wicks and tails on the candlesticks. Now they're green. Now you get a Heiken-Ashi, bullish Heiken-Ashi reversal right there. See that little flat bottom on that candlestick? So that technically that's a Heiken-Ashi reversal. But there's a caveat here. When you get a reversal back into the original trend, you want the Heiken-Ashi reversal candle, in this case the bullish reversal candle, you want it to be at least as big or approximately as big as the candles that form the original trend. This tells me that this is a too weak a reversal here, right? So I'm not going to take that. Now, it would have worked. You would have got 4 or 5 candles out of that. But what I'm looking for is a real strong reversal. So it moves up and it pulls back, and I get another Heiken-Ashi bearish reversal here, and here is where my trade takes place, right there. No lower shadow. This is a Heiken-Ashi bullish reversal candle, and see how big it is? See how big it is compared to these and compared to these? That is my reversal on Heiken-Ashi candlesticks. Right now, understand something on Heiken-Ashi candles. Once you've got a flat bottom on it, when the trade or when that candlestick is being created, let's say this is a 5-minute chart. When that candlestick, when that candlestick is being created, once you're about halfway through that particular duration, let's say it's a 5-minute candle, let's say you're 3 minutes into that 5-minute candle creation, you don't have to wait for the candle to complete. People ask me this all the time. Do I have to wait for the Heiken-Ashi candle to complete? If you were trading a regular candle, you would have to wait for it to complete. But a Heiken-Ashi candle, once you have a flat bottom like that, the likelihood of this maintaining that flat bottom after about 3 minutes out of a 5-minute candlestick is about 98%. Very rare that it would ever come back and basically create a wick on the bottom, a tail on the bottom. So you can get into it on this candle as it's being created, which gets you in early. And you see what happens here. Again, we're halfway up here. Boom, 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 boom. This rides right up. Here is your trend, your Heiken-Ashi bullish trend right here. And this is where you would get out. You're starting to get wicks and tails. Now you're a red candle. You take your profits right there. Very nice trend, and that's what Heiken-Ashi candles do. That's how you use them. I specifically use them for reversals most of the time. Heiken-Ashi reversal candles to get back into an original trend. Now, again, the important things to remember here is, right? Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Those are the 2 most important things you can get from this. Bullish Heiken-Ashi reversals are identified by a flat-topped Heiken-Ashi candle, which would be bearish, followed by flat-bottomed Heiken-Ashi candles, which would be bullish. Now, they don't have to fall one right after the other. You can have some smaller candles, some doji candles stuck in there, but you're going to get a Heiken-Ashi reversal. You're going to have flat-top candles, and then you're going to get a flat-bottom candle. It's about the same size as the flat-top candles. And that's your reversal for Heiken-Ashi bullish reversal. A bearish reversal, exactly the opposite. You're going to have a bearish Heiken-Ashi reversal. You're going to get flat bottom candles, which are bullish, and they're going to be followed by flat top candles, which become bearish. That's your Heiken-Ashi bearish reversal. Okay, this is what you want to remember from these candlesticks. Again, understanding this shows that little trend we just talked about a little while ago coming down. If you have a support level, let's say this is this right here, this blue line, let's say that's the 8 exponential moving average, and you're looking for this stock to reverse and go back bullish above the 8 exponential moving average. Right, so here's your bearish Heiken-Ashi trend. Here's your reversal right here. So you're getting these candlesticks, there's a reversal right there. This is where you take it. It breaks up above the 8 right there. You can take it on that candle. As long as it stays above that 8, you stay in it. Here it is getting red, but it stays above that candle, and then you ride it all the way up. That's your trend, and you can see that the Heiken-Ashi candles, they take a lot of the noise out of the particular trend. You're not getting a lot of choppiness like you do with regular candles. This is something you can stay in. And once it starts to do this, of course, you're getting out now. It's getting red, you're out of the trade. You made enough money on this thing. Okay? And that's how Heiken-Ashi candles work. Again, the advantages of them, it smooths out the price action, reducing the noise. That's important. It makes identifying trends much easier. You can see these Heiken-Ashi trends. When you're going to have less noise in the candlesticks of up and down and up and down. It's going to be a much smoother trend. It improves identifying confirmation of trends on trend reversals. This is what I use it for most. And it does help identify potential actions when the candle bodies shrink or the reversal occurs. But I typically, when I'm going to get out of a trade, if I've got enough profits and I'm looking to exit the trade, I'll switch from Heiken-Ashi back to regular candles, so I can get out of the trade as soon as the reversal occurs. Since I'm going to get out anyway, I don't need to wait, have it confirmed that it's done. I'm going to take my profits. All right. Okay, so this is a trade, a chart from Uber, an old chart. But I want you to see this is a standard candlestick chart right here. All right. And look at May 1st right here. This is May 1st. This date right here. This is the candlestick for May 1st. See, we get gap up, and then a move like this. So if you're trading this is really tough to trade with these gaps like this. But let's take a look at this on May 1st on a Heiken-Ashi candle. Right, here's May 1st, the Heiken-Ashi candle. See the candle right here? You see the downtrend, flat tops? See the flat bottom right here on May 1st? You don't have to wait for it to close. This is where you take the trade, right there. All right, it's going above the 8 exponential moving average. You take the trade right there. You're in the trade on May 1st. Then you get this beautiful move up, all the way up like this. And this is where obviously it's turning green now. You're going to get out. Now this is my TC2000 chart. So my candles are colored differently on my TC2000, which is my charting program. And I do some scanning on here because I can identify when the Bollinger Bands are expanding. But I just want you to see clearly what Heiken-Ashi candles look like when you put them on here versus a regular candle. Okay, see the gaps. Notice what happens with Heiken-Ashi. No gaps. There's no gaps in these trades. So this was the way you could got into it on this day, right? As it bounced up here, and you would have been in it all the way up to here. That's a big trade. That's a big trade for calls for Uber. All right. So I'm going to look at some live trades, and I'm going to bring up the platform here. Let me bring this up. All right, so I'm going to look at some trades, and I've got this right now. I've got this set on Heiken-Ashi. By the way, if you want to change, once you get the platform, once you get the software, if you want to change it to Heiken-Ashi, just click on Style. See, it says chart type. Right, here's your candlestick. That'd be a regular candlestick right there. If I want to change it to Heiken-Ashi, I just go to candlesticks, and I go to Heiken-Ashi right there. That's going to turn to a Heiken-Ashi candle. All right, and here's all my indicators. Here's my 8 and here's my 15. On the daily chart. All right, this is just one I just randomly picked. This is target from today. All right, this is today. This is the close today, 12/26. You notice we were in a little bit of a downtrend here, and then target just reversed with a flat bottom Heiken-Ashi reversal candle right there. It's been in a nice little trend. You can see that it's been in a nice little trend right here, moving up. Right, coming down, Heiken-Ashi reversal here. Boom, that's a good long setup right there. And now we're basically getting a little pullback, a PBO, a little pullback opportunity, and now we'll bounce here today. This is definitely one you can look at for Monday to go long on target, right? It's a good setup. You see that. And again, it wasn't an awful lot of candlesticks today that were easy to trade because it was such a slow day. But let me look at what's it, SGML? Yeah. Is SGML, right? So this is a lithium company right here. Now this is see how it's a flat bottom candle? This is considered not a reversal candle. This is considered a Heiken-Ashi continuation candle. This is a continuation of this uptrend, but it indicates a good place to get in right there, right? Heiken-Ashi continuation candle. And let me look at a couple of other stocks here. And we can look back on some of them anyway to see what they look like. But let's take a look at NVIDIA. All right, so here's NVIDIA. All right, so this is NVIDIA today, daily. This is NVIDIA's move up here today. See how bullish this is. All right, so here's your current time frame, multi-time frame momentum. It hasn't really given you much opportunity, but notice today the current time frame and the multi-time frame are now bullish, right? And we do have a Heiken-Ashi candle, but we had it right here. But it would have been a little too soon to take it because you didn't have any institutional buying in the multi-time frame. So today's was a good reversal or a good setup for NVIDIA for long going into next week. And you can look back and you can see these things repeating themselves all the time, right? Like if you wanted to be short NVIDIA here, right here as it comes across the 8 and the 15, see how it's red right here and it compresses? This is where you would take it short. And as long as it stays, closes below below the 8, you stay in 8. Again, below the 15, that's bearish. And then it reverses, starts to compress and get out, then you get out. So that's what you're looking for on these, and they'll show up a lot of places. Now, it's also important to know that you can use these on a 5-minute chart, right? You can use these Heiken-Ashi candles on a 5-minute chart because this is NVIDIA with a 5-minute chart. Now, this is today. This is today in NVIDIA, okay? This is when I mentioned to the room today. But if you see the VWAP right here, what you're looking for is you're looking for the stock price to get above the VWAP with above the 8 right here when the buying is going on, which it is right here. See, it went from selling here to buying here, but you're way below the VWAP. Once you get above the VWAP here, that's a long 5-minute chart. This would be a SPY super system trade for a 5-minute chart that you're going to get into and get out fairly quickly, right? So this is where you would take it right here, right? You see the breaking above the 8, breaking above the VWAP, the 8's above the 15. You take it here, and as long as it stays above above the 8, you stay in the trade, right? And then it starts to see how it flattens out right there. You see how it goes to yellow here? You're out of the trade. That's your trade in NVIDIA today. If you wanted to take a long NVIDIA today, that's the kind of setup you're looking for. And then look at this. Here you get, it's coming back down. You see how it's breaking below the 8 and the 15. There's your short trade, right down to the VWAP. You're likely going to get out as soon as it gets to the VWAP, but you're just following this thing down. You notice that the institutions are selling this, right? Even today, which was a horrible trading day. Now I'll show you one that I did take today on silver. And silver was a big trade today. There was several opportunities to trade silver. It had a big gap up this morning. This is a Heiken-Ashi candle, right? But if we look at it on a regular candle, let me show a regular candle. This is what you see. See the gap up? So this is the catalyst that you got with us this morning. Big gap up one. But let's take a look at the Heiken-Ashi candles through the day. Right, so it gaps up here and it rides kind of sideways, right? So you could probably take it in here if you wanted to, but there was a couple of really good opportunities. I'm not going to short silver; it's much too bullish today. But here's where I went along with this, right here. Is it did a Heiken-Ashi reversal candle right here, pretty strong, right here. And here is an 8. Notice the 8 crossed above the 15, right? That's where I took the trade and rode it right up. And this was the one that I took, and I made 50% on the calls today on that particular trade. As it stayed up. And once it starts to do this, I'm out of the trade. But you can use it 5-minute. You can use it on your daily chart for looking for swing trades. You can use it on the SPYs. You can use it on the Qs. You can use it on anything. Right? This is what you're looking for. Here's a SPY trade here. Here's the end of the day. See how the SPY came down here? Comes below the 8, that's a bearish trade right there. Stays below the 8, you can just rode that down for the last half an hour. Is another. I wouldn't have taken this because there was too many green candles before it broke the VWAP. So and the SPY today was to me it was pretty much untradeable because it was chopping all over the place, as you can see. All right, so that's what Heiken-Ashi candles look like. That's how we use them in the SPY super system on the 5-minute chart and on the daily chart. Okay. Over here, you've got some scans, by the way, that we have. This is the cascading up scan. This is relative strength. Cascading down, this is relative weakness. And this is bullish Laguerre. It's called this is the potential stocks that you could take for a swing trade. And you can look at them. I can bring up the daily chart and see if they look like it's something I'd be interested in taking long. And see this one, it's coming here long. I can't take it. You see, current time frame momentum, multi-time frame momentum. They don't align. Bearish here. Bullish here. Can't do that. But I can just click on these and I can see if there's anything I might want. SMH looks pretty good. Looks pretty good. So that's how I would find some of these to trade. VRT. Again, see this red here, blue here? You can't take a swing on it yet. Okay, so that's how I use it. That's how I use the Heiken-Ashi candles to find my confirmation of reversals. Okay. Any questions on Heiken-Ashi candles? Anybody use those? Anybody use Heiken-Ashi candles in their trading right now? Okay. Oh, you do? Yeah. ADP. Okay. Deepak. Yeah. Yeah. It's that you find them effective. I mean, they're very, very helpful. I mean, there's no question that they're very helpful in cutting out the noise. Okay. Let's talk about the results. I'm going to talk about the results we've had in the room with our trades and on the alert service. I'm going to cover some things. I don't want to go into a huge amount of detail on this. Yes, you do, Deepak. Yeah, you think they help a lot, which they do. This was 2003 here, using $2,000 per trade in the room. Produced a little over 60K, 5,000 a month. 2024 produced about 55. 55, about 45.81 a month, so 55,000 that year, 45 a month this year. Profit on if you took all the trades with $2,000 per trade. This was through September of this year. I haven't done the last 3 months yet, but this is through September. 47,765, 53.07. This is our best year yet as far as per month profit. That's now November was and December has been a little weak, so this is probably going to pull down a little bit, but it's still going to be hang in there around 60,000 for the year. Okay, and this is something I just wanted to point out for anybody who remembers what happened in the market back in April when they put the tariffs on and took the tariffs off. This is the 4 trades we were in at the time, in the room and on the alert service. We only had 4 trades on there, all bearish. We had Broadcom, AVGO. We get in for $75, and we get out for $104. $104, $104, 39%. We had Nike. This was a huge one for us. We get in for $285. We closed it for $9, 216% profit. Thanks to the tariffs going on. Nike makes most of their products in Vietnam. It was going to be a 39% tariff in Vietnam. We didn't know that when we had the trade on, but we took advantage of it when the stock plummeted down. We had Sarepta short, and we had NNE short, and we made good profits on all of these. Well, the SPY was down 10% in 2 days. These are the 4 trades we had. We had all of these in the room, and we had all of these on the alert service. All right, so let's just kind of recover the results recently. Here's June. A couple things to point out in here. These are the percentage gains on the trades we take. And I highlight this because it's important to understand what kind of results you're going to get on the trades that you get, whether you're on in the room or whether you're on the alert service. We're not getting 400% or 500% a trade. A lot of places will tell you they can get 400 or 500% a trade. You'll watch a webinar or something like that. You can't. Those things, those methodologies are way too risky. You can't do that continuously or consistently. So this was our June trades here. I was on vacation for a couple of weeks. Only had 11 trades, 91% win rate, 10 wins, 1 loss. Produced about 3,800 about roughly. In July, I took a lot of trades in July. Rested up from vacation. We did a lot of trades. This is an awful lot of trades. We usually don't do this many, but July was 30 wins and 3 losses. Again, 90%, 91% win rate. That was a good. This is our best month this year. It produced about 16.8, almost 17,000 in profits in July. August, 20 and 4, 84% win rate, 59.60. In September, these are the trades we took in September. Again, you can see the profits. 25, 33, 13, 42, 33. This is the kind of percentage we get consistently, and we take losses. Everybody takes losses. Believe me, everybody takes losses. We take losses as well. But it was 21 and 4 for 84% win rate. January through September, 155 wins, 28 losses for 85% win rate. And so 2,000 invested in each trade, as I said before, 47,765. So those are the results so far this year. I'm not gonna go through all of these. This is 2024. I keep these up here because people are interested, but I keep them running total of these things. But This was January of 2024. But again, see the percentages. Every single month, it's always in the same range. That was 90% win rate, 92% win rate in February, 88% win rate, and this was May. There's some time spreads in here that we did. You can see the percentage gains, 30, 40, 18, 48, 38. Very consistent on these profits. June trades here, again, same thing. 25 and 4, 86% win rate. The alerts, we had 14 and 1. I mean, the ones that were alerted, 92% win rate. Made more money in the alerts last June than we did in the room. That's June 2024. All right, and this was July, 22 and 4, 85% win rate. August, 89% win rate. September, last year, September 2024. My only losing month in 2 years was this last September. And here are the trades. And 8 wins and 5 losses, 62% win rate. To me, it was embarrassing, but that's the way trading is sometimes. We had a bad month, couldn't find a lot of good trades, had some decent winners, only lost 1786 in the room, only lost 295 in the trade alerts, but still it was red. And we had after 4,500 in August, got red here in September. That's a red month. And I like to show this. People usually don't show their losing months, but I want to be transparent here. And here was October, right here, right back up again, 85% win rate, $7,400 in profit. Nice October. November, another good one. And this, I'm not going through every one of these. This is January through April this year. You know, you can see the win rates, 84, 89, 83, 80. Continues. All right, so that's kind of the track record we've got. This is what the alert service looks like. People ask me, what do I get when I get an alert? You're going to get an alert that looks like the date, 3/28. This was when we did the Nike trade. It's going to have the symbol right there, Nike, by the April 11th, 67 puts. All right. So there is your expiration date, April 11th. Is your strike price, 67. They're puts, so it's short, and this is what you're going to pay for it, 285. That would be the whole first alert. Then you would get another alert that looks like that, and it'll have a sell order on there for a sell price. Sell order for $9. And then you would get another alert that shows the whole thing, and they were sold for $9. And there could be additional, alerts in here if I adjusted the sell order to, you know, 850 or 950 or something like that. Okay. Now, how do we achieve the stunning results? I think we know we follow the process. We are able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We only take those kind of trades. Trade the best, skip the rest. That's where it comes from. All right, that's our kind of strategy. The SPY Super System software identifies when institutions are creating a trend. Triple screen assessment of momentum, trend, some money flow. Momentum is the most critical. Momentum, by the way, momentum, a lot of people misunderstand what momentum means. When you look at an oscillator, what's momentum? Okay, if you've got a green candle, a green candle, a green candle, people say that's momentum. That's like stepping on the gas of a car and it's moving forward. That's really not how momentum is measured effectively. What you do is you go from one candle to the next, from one 5-minute candle to another 5-minute candle. And what you look at is what was the high of the candle? Where did the stock close on the candle? So as the candlesticks are repeated, right? You get 1 candle, 2 candles, 3 candles. As the high of the candle or the close of the candle gets closer and closer to the high of the candle, that is momentum. In other words, the close of that candle is getting higher and higher to the high of the candle. Okay. All right. So I'm gonna go over again. I don't think I have to go over this charts again, but here's the chart here with the on the 5-minute chart. There's our oscillators right here. This is current time frame momentum, multi-time frame momentum, and long-term trend. Here's what we use for 5-minute trades: VWAP, 15 EMA, 8 exponential moving average. That's what you need. Again, this is the template that does the same thing, but this is just for people who want an intraday trade. It's got the current time frame momentum, and it's got all of the other things in here, but the current time frame is all you need. You don't need multi-time frame. All right, so here's some quick trades as far as this was a Heiken-Ashi reversal candle on the SPY, on the Qs, I'm sorry, right here. But we took it, see, we had a Heiken-Ashi reversal right there, took the trade right there. Notice it went from buying to selling. There's the entry. Then you take the trade and you just follow it down. I don't even know how far this one went. This was but you can see how it's following that 8 down beautifully, right? SPY super system trades, I'm just going to touch on this. This is when you take, we have a trading methodology called the SPY super system on the Qs, the IWM, or the SPY, but you can also use it for stocks. And this is using the 5 minute, you're using this, right, on a 5 minute chart to pick these kind of levels that we just looked at on here on the Qs. That's the SPY super system trade, right? A lot of them can be very quick, 1, 2, 3, 4 candles, so I can't post them. But this is the results I've had doing this, right? Because I can't post them. These are the results I had back to July of 2024. And it's extremely good. There's an awful lot of trades, and you're only in one trade at a time, and they don't last very long. But that you can find a lot of them if the market's giving us good setups. All right. Some days there's not a lot. Some days there's a lot. But these are the results I've had doing that. Quite a bit of money, as you can see. November was good. December last year was good. The last quarter of last year, the SPY super system trades that I just talked about, that we're just trading off the 5 minute chart. This was a 33 and 4 in October, 89% win rate, 48.31. This was the room. These were the trades that I did. I don't know if you would have the same results if you were following the system. Everybody is different on this because I can't post them. These I posted. If you were in the trading room and you took the trades that with all the trades we posted, and you put 2,000 in each trade, this is what you would have got, 74.48. Again, this is not included in this. This is not included in this. They're completely separate methodologies. Again, right here, this was November. You can say the same thing here. Good wins in December right here. Excellent. I have not had a losing month on the SPY super system trade yet. I've had losing trades, but I haven't had any losing months. I haven't done an awful lot lately because I'm focusing on trying to get some swing trades and everything for everybody. But a lot of folks in the room are trading this every single day. All right, and there's the last quarter of last year. Again, 24.6 on the SPY super system, 17.7 on the regular trades in the room, 44 and 7, 156 and 24. You see the number of trades, huge on the SPY super system. Okay, all right. So again, we've already looked at this. Here's the SPY super system. We already looked at this trade. Here's where the entry is as it goes to buying. It moves right up. This was before we even had the Laguerre indicator on here. Another one here, right? This was a quick one. See this? We bought it here. We get out right here. Boom, boom. In and out. $90 profit just in that very quick candlesticks. Again, another one here. This is off that the current template that just uses the 5 minute chart. So again, you see the blue going to yellow. You buy it right here, and you see it out right there. Starting to reverse on you. Okay, so this is basically what you're looking at here. Again, this was the SPY with that same new template. Again, you get this template and the original template with all the indicators on there if you just want to trade intraday trades. Okay, there it was right there. It goes green. You take it here. You get out right there. You can see it moving up. It's pretty obvious when the institutions are in the trade and when they're not. This was a SPY super system trade here in IWM. Really nice move to the downside. See it, the institutions were selling all the way across here. All right, and here's some charts, trades that we've done recently. This was a line. This was supposed to be a swing trade, but we took it off in one day because it moved so much. You see the institutions buying here. You see how they went to selling right there, and this is where we took it as we get a pop out of the box symbol off the VWAP. We took it right there, and we rode this thing down. And we were out an hour later. We were out for 52% profit, 51% profit. That's why I didn't hold it overnight, even though it was originally set up to be a swing trade. Okay, this was a swing trade. This is a daily chart right here in URGN. This is where we took the trade. Notice bullish, bearish here, goes to buying right here, but we're still compressing. We compress right here and we take it. And again, this VWAP is gone now from the daily chart. I don't want it on here. This is where we took the trade. Kind of went sideways. It didn't really do much for us, and then it popped right there, 48% profit in about a week. NVIDIA, I showed you this one already, and SMR, I showed you this one already. It was Nike. This was the Nike trade I told you about that we had such a big move on. Here's where we took the trade on the 28th right there. Look at the institution selling this thing, right? Selling across the board. We took it here as it broke down out of this compression, and we held on to it. It made money. It was up that day, but It didn't do much, and then here comes the tariffs, and there is a big drop. We took it out off immediately on the open in the morning. 216% profit on that drop right there. Same thing with Sarepta. We had this. This also dropped down again. You notice how the institutions are selling this. We know that the institutions are selling these. Here's HIMS. We took this long. Institutions are buying it. Look at all the green. Institutions have been in this. We just have to find the right spot, which I probably was a little late in taking this. I probably should have taken it back here, but we did make a decent profit for 25%. All right, so that covers the charts, covers the strategies. Here's all the strategies we have here. It covers the alerts, and we covered Heiken-Ashi. I hope that was a help as far as that's concerned. So I'm going to show you is what we have for these holiday specials from Rightline, and that link is in the chat box, by the way. Right now he's got a link for all the systems, but this is for the option rooms and the text alert service right here. Okay, just the option room and the text alert service. You can get a 2-week free trial. That'll give you the text alerts. It'll give you the live trading room for 2 weeks. Okay, and you get to access the what's called the Wise Way to Trade Options. Those are basically the videos. I've got 31 videos on the strategies, the indicators, how to use them, everything about what we talked about here today. It's hard to go into all the details on all of these that I've got out there, but there's a lot. There's one on time spreads, one on weekly ATMs, one on straddles and strangles. Then, if you want to save some money, the annual on the options room and text alert service is right here. Text alerts, live trading room, obviously my training videos, and you get also a private Discord chat access. We've got a Discord room where we have 2 professional traders in there all day long. You can talk to them, you can ask questions from them. They show charts, they talk about what particular sectors are doing the best. So that comes for annually for the room and the text alerts, $11.95, which is a really outstanding price considering how much profits we're taking here. Okay, or you can do a one-time payment if you don't want to have to re-up these things. One-time payment is $24.96. You get the alerts, you get the room, you get my trainings and modules and the Discord room forever. Just one time and you get it forever. Here's your coupon codes for that. Save 50, and here's 50 plus save 500 on the all lifetime memberships. All right. Now, if you want the software, if you're interested in the software, this is a key thing. The annual membership of the software, SPY Super System software, comes with 1 month of the options live trading, so you get into the room for a month. You get the scanners that I showed you. You also get all the training classes I talked about, and it gets installed on your machine. Thinkorswim or Ninja if you get Ninja, but it'll get installed in Thinkorswim. You don't have to pay for Thinkorswim; you can just download it, and Rightline will put it on there for you. One of the techs, Sergio, probably will put that on your machine. They take over the machine, put it on there. It'll look exactly like mine. Exactly like mine. You get the same information that I've got on my chart. Right? That's annually $9.98. Really good price for this particular software because this is a really, for anybody, like I said, anybody who wants to be serious about trading needs to invest in the best tools, and this is the best tool. Or you can do a one-time payment on the SPY Super System software that gives you lifetime access to the live trading room as well. So you get the trading room forever, and the SPY Super System software forever. All updates you would get, all of that stuff would come to you. You get the scanner, you get the options, my options training videos, and you get it, of course, the white glove installation they'll be putting on there, and future tech support. Anything that you need support on, you just call them. It's all included in the price. $19.96 for the forever. That's really that's an outstanding deal on the software. The software, I love the software, and I mean this thing has made such a difference in my trading. So those are your options right here. Here's the options room and text alert service. Right, you can do it for 2-week trial, but you don't get this discount, which is this big discount for $11.95 for the whole year. Obviously, $3.96 a quarter is a lot more. Or a one-time payment for $24.96 is the SPY Super System right here for the software. And this is something I did. This is a return on a subscription investment. I thought this was pretty interesting. What I did was assume that the max annual subscription would be about $1,600. That's basically the quarterly times 4. So that's maximum based on the quarterly pricing. The average trade size is $2,000. So we're assuming you're taking all trades at that level. Your ROI on these trades, even if you were doing 1,000, by the way, your ROI is not going to be as high because you're taking smaller trades, but the ROI is 40x. All right, so you're getting 40 times the amount of money that you use for your subscription back in profits, and that's paid for itself every single year. And this has been very consistent from year to year. So again, very high ROI, return on investments. Simple math, obviously, it's proven results. And of course, disclaimer, past performance is not indicative of future results. Trading involves risk, and individual results may vary. A lot of trading is dependent upon the individual trader and what their trading mentality is like. We talked a lot about that. That's fear and greed. You've got to try to keep it out of your trading. Okay? And this, I think, gives you the best opportunity to do that. So there is the SPY Super System, the software with the scanners. Lifetime right here, 1996, and annual software $998. All right, with installed on your machine by Rightline. It'll look exactly like mine. And here's the option room and the text alert service, 2-week trial, annual text alerts right here, $11.95 text alerts, and the room for a year, $11.95, and one-time payment, $24.96 for all of this. Okay. So those are the particular offers we have. If you have any questions, I'd be happy to answer any. I don't think we do. I think everybody's ready for a weekend after Christmas, a shortened Christmas week. We get a Christmas, New Year's week coming up next week. Market's probably going to be pretty slow next week. I try to do a lot of time educating and training on days like this because we got plenty of time to take some trades. Talk about some trades, not to take some trades. All right, everybody, thanks so much for being here today. I appreciate it. I hope everybody had a great Christmas, great holiday, and I hope you have a wonderful New Year coming up. Again, I'll be back in the room on Monday. I look forward to seeing some folks there. Have a good weekend.